more than just business news, we're news for business people.
Hello and welcome. You are watching Ask BQ on BloombergQuint. I am Pradeep Pandya.
Hi everyone, and I'm Navneet Saluja D'Souza. Well, this is the show where we address all your stock queries, so you can write to us on Twitter, Facebook, or just call us on 022-4540-4141. You can also mail us at askpq@bloombergquint.com with all your financial queries, and we'll try and address as many as possible on the show. Just remember to add the AskPQ hashtag. Let's get in our two experts of the day then. Sumit Bagadia of Choice Broking and Parthiv Shah of Tracom Stock Brokers are here to answer all your queries. Welcome to the show, gentlemen. Good afternoon to both of you.
And let's look at how markets are doing on expiry day. There is some recovery after initial correction in markets. If you look at Nifty and Bank Nifty, both are, I guess, all set for record levels. Not so much in Nifty Bank, because I think there the level would be around 100 points higher than where we are. But the record levels definitely for Nifty that we see, and we are all set to give you a record expiry so far in the history of NSE. So this is going to be interesting. If you look at some of the sectors and stocks that have really been helping, metal has done really well today, led by Steel Authority. Capital Goods Index is also doing well. The leadership shifted from L&T to BHEL in public sector. So actually PSU stocks are doing much better. Even oil companies for that matter, HP, BP, have done quite well today. Dilip Buildcon, NLC are some of the stocks in mid-cap space which have risen quite a bit. NLC, after the success of their QIP, really has moved up. Among banking stocks, you have ICICI and Bank of Baroda who have corrected. So both private sector and public sector banks have seen some bit of correction in today's trade after yesterday's rise. Among mid-caps, you have Mindtree, Tata Communications, PI Industries, some of these stocks which have corrected. Well, that is mainly because of the quarterly numbers that have came out with.
All right, so Nifty is back above the 10,300 mark, and the Bank Nifty is also trading above the 25,000 mark. Let's address our viewer queries then. Our first query comes from Projwal Ghosh, who writes to us on Twitter. He has 500 shares of Indocin Bank, which he bought at a price of 1,600 rupees with a long-term view. He wants to know what should he do with this investment, and I believe the buy price is pretty much closer to the current market price, which is hovering around 1,610. Let me take this query to Parthiv. Parthiv, Indocin Bank, which corrected yesterday with the rally one saw on the PSU banking space, largely, there were a lot of people in the market talking that there could be a shift from private to PSU. Do you agree with that view? And what is your view on Indocin if somebody is holding?
Frankly, I think yesterday's move that we saw in many of the private sector banks, I thought it's more like a knee-jerk reaction, because this bank recap in the PSU banking space is a phenomena which is going to happen over the next 5 years. And I think the government has very categorically said that not all banks are going to get this capital. Only the ones who deserve and, the ones who will be able to satisfy certain criteria will get. So I think it's going to have a long gestation period for that particular money to get impacted. And again, we need to see what kind of NPA write-offs these banks show now that they have some capital cushioning. So all this transition is going to take time. And I still believe, I think quality franchises like Indocin Bank should not have any trouble in stealing more market share. Rather, I think India is still way underbanked, and even if the PSU banks come in terms of competition, we know the type of quality franchisee a bank like Indocin Bank is. Whether we talk about their high-yielding retail portfolio or their very low credit cost, which is one of the best in the industry, their asset quality is one of the best. They have done fantastically in inorganic growth. They recently have acquired Bharat Finance, which is going to add to their kitty, which is a high-yielding portfolio, and it's going to be accretive in terms of the return ratios. And also when we talk of ROAs, I think best in the industry. So now I think it's a very well-set bank, and I believe that it's more like an HDFC Bank quality management, where they are delivering quarter on quarter in terms of the numbers, even when there was competition from the PSU bank. So I think that is not something that long-term investors should worry. And I think I certainly would advocate a hold in Indocin Bank, at least for the next 3 to 5 years. And still a lot of value can be created from these levels.
Okay, so Prajwal, you need not worry about this investment. But Sumit, I'm tempted to ask a question here. This could well be an opportunity for those who haven't bought into Indocin Bank or private sector banks, an opportunity to buy at lower levels. What kind of likely correction do you foresee? What would be the key levels to watch out for, and where can one really, look at fresh buying?
Hi, good afternoon. Well, as far as private banking space is concerned, what we can see is that in last couple of days, we have seen that from higher levels, we have seen a correction in most of the private banking stocks, and the move has been shifted to PSU banking space. But the overall scenario is looking positive to me. We are expecting private banking space to move up from present levels itself. If there is a possibility that we might see some correction from present levels, and if that correction comes, then that should be used as a buying opportunity. What I can sense looking at the charts is one can initiate long positions at the current market price also, and if there is a dip of around 30 to 40 points from present levels, or probably 50 points from present levels, then that should be used as a buying opportunity. 1550, 1600 levels are good levels to initiate long positions in Indocin Bank, and on higher side, immediately we will see a move till 1670 levels. If the stock is able to break 1670 on closing basis on higher side, then we will again see a fresh upside move in the counter, in which we can see levels of around 1800, 1850 levels in next couple of months. So we feel that most of the private banking space are looking good to me. I think as far as your question on Indocin Bank is concerned, one can initiate long position at the current market price for the upside target of 1670 levels, and a closing above 1670 will take stock prices to 1800 levels in next couple of months.
All right, so that's the view coming in on Indocin Bank. The near-term target, which Sumit was highlighting, is about 1670 on the charts. Let's take another query. This one comes from Kamal Banswani, who writes to us on Facebook. She's bought 500 shares of Suzlon Energy at a price of 26 rupees. Well, she has the long-term view, but she wants to know if she can add more, because if you look at the price, it's at 16 and she bought it at about 26. Parthiv, she wants to know if she can average out her position, or according to you, she should just exit from Suzlon.
Very frankly, I think I've been not very positive on these renewable energy plays. The reason being that I think the pricing and the competitive the intensity is getting really bad. And now they're talking about new projects which are going to be built very, very competitively. There are lots of MNC players who are very cash rich, who have lower cost of funding, names like Gamesa, etc. So I think Suzlon, no doubt, it has shown a good turnaround. But I think unfortunately, due to a lot of dilution that might take place due to the FCCB, I think it does not seem that this stock has got its traction. So I think it's a frustrating stock. Despite the last 3 quarters, which have shown very good numbers, it's not getting percolated in terms of the share price movement. So I think this is a sector which we feel that one can avoid. Rather, I'm more confident on names like JSW Energy and the overall power sector, because now that we are talking of so much of investments, and especially hoping that the private capex comes back, industrial power demand is going to inch up. And players like JSW Energy, who are extremely well balanced in terms of their portfolios of power generation, I think that's a stock which can create a lot more value than Suzlon Energy. So I would advocate a switch from Suzlon Energy to JSW Energy.
Okay, so a pure play energy business would be a better option. That's the advice from Parthiv. Shivam Singh writes to us on Twitter. He wants to invest in LIC, LIC Housing Finance, I guess. Sumit, what's your call?
Well, housing finance stocks are looking good to me. We feel that next couple of months are going to be very good for housing finance stocks. I think one can initiate long positions in housing finance stock at the current market price, or if there is a dip of around 3-4% from present levels, then that should be used as a buying opportunity. As far as your question on LIC Housing Finance is concerned, the stock has already given a correction from higher levels, and now it seems that the stock has support at around 600 levels. So till that time these levels are not taken away, we will see a pullback move in the counter. This pullback move can be seen till 650. 670 levels, and a fresh uptrend can resume once the stock is able to break 670 on closing basis. So for a trading perspective, yes, one can initiate long positions at CMP for the upside target of 650, 670 levels, and for a longer term time horizon, these are good levels to accumulate and invest in the counter for the upside target of 670 as an immediate target. And if the stock is able to break and give closing above 670 levels, then we will see a move of around 10% to 15% from the 670 levels. So on higher side, the longer term targets would be 750 and 800 levels. So these are good levels to initiate long positions. One can initiate long at CMP.
All right, so that's the view coming in on LIC housing. One can look to create fresh longs at current levels. Let's take our other query, which comes from Mohit, who's written to us on Facebook. Mohit's bought 2,000 shares of Shiva Cement, I believe, which he bought at a price of 36 rupees. He has a 2-month view here, and he wants to know if he should hold or sell. Well, Shiva Cement has been in focus. In fact, he's bought at the current price because of the JSW Cement stake in it. That's the biggest shareholder in that. There was some news of reverse merger also coming about. But since it's a 2-month time period, I'll take this query to Sumit. On the charts, what do you think he should do? He's bought at 36.
See, this counter has already given a good move. In fact, in last 6 days or 7 days, we have seen that the stock has moved up by almost 10 rupees. From the levels of 23, 25 levels, we have seen an upside move, in which we have seen recently the stock has touched levels of 40, and from there we are seeing some profit booking. Immediately, the stock looks a bit overbought. And overall, for a short-term trading perspective, I don't think that one should stay invested in this stock. It's better to move out of this stock. If there is a possibility that we might see a move around 3 to 4 points from present levels, but it's better to exit the positions and invest in some better frontliner stocks. As far as levels are concerned, immediately the support for the stock is placed at around 32, 33 levels, and on higher side the immediate resistance for the stock is placed at 40 levels, which is a recent high. If the stock is able to break 40 levels on higher side, then we can see some upside move till 45 levels, and on downside 32, 33 are the immediate support levels. If these levels are taken away, then we will again see a fall. In the counter, in which we can see levels of around 28 or 30. So it's better to move out of this stock once we see a move around 2 to 3 rupees from present levels.
32 is the stop loss for you, Mohit, on Shiva Cement. We are getting lots of your queries on Facebook and Twitter. Let's look at some of these queries coming from Rahul Patil to begin with. He has bought 2,125 shares of Vedanta at 305 rupees. That was a year ago. And he has 1-year horizon. Should he hold or sell? What's your call on Vedanta? Parthiv is a long-term investor sitting on gains of around 10%.
Absolutely, he can hold on to it. And the reason being that we know Vedanta, I think now is going to focus a lot in terms of deleveraging its balance sheet. They have fantastic world-class assets which are very low cost, especially most of their mines are very low cost mine assets. And I think right now we are seeing a lot of better realizations taking place, whether we talk of copper, aluminium, lead, zinc, and for that matter, even oil has stabilized. And I think the asset that they have gained, I think their oil's cost of production is somewhere around $15, and currently oil is hovering at around $52. So including all the tax and cesses, I think still a cash flow generating asset for them. So I think now that the strategy that they have in terms of deleveraging the balance sheet will improve the fundamental return ratios. And also I believe from purely in an enterprise value to EBITDA levels, I think if we compare with many of the global peers like Rio Tinto, BHP Bullion, because in India we don't have any other conglomerate which is such a multi-commodity conglomerate. So in that case also I believe Vedanta is available cheaper. So I think they are on the right track and all their assets will do well and generate good cash flows. So I think over the next 1-year horizon, which is a reasonable time frame to hold on to, I think definitely he can hold on.
Okay, that's the view coming in on Vedanta. Let's take another query. This one comes from Raghavendra, who wants to invest in the pharma space. Raghavendra wants to know which stock should he look at for investment in pharma. I'll just club that query with one more. Kirti Mishra, who's joined us on Facebook, she wants to know if she can average Lupin at current levels. I'll take this query to Sumit. Is there, I'm really sorry, I'll take it to Parthiv since it is a fundamental query. Parthiv, in the pharma space, do you think there is any stock which looks attractive at these levels, considering the kind of correction which all the pharma counters have had? And also on Lupin, at current price, do you think somebody should average?
See, frankly, Navneet, my view is that this is such a market where I think once even long-term investors start buying stocks, and if they don't see a movement and they see many of the sector stocks getting re-rated, they tend to get slightly frustrated. So my advice for pharma is, yes, we are bullish. This is a good contra time to add quality pharma franchisees. I think something what we saw in PSU banks, which stayed lackluster for ages, and all of a sudden with one positive news, I think we saw what re-rating took place. I think something similar we are envisaging in the pharmaceutical sector. sector. And many smart fund managers, I think in mutual funds, they are accumulating pharma sector. Yes, I think Lupin is a good quality franchisee, and I think as the management has also guided for, come FY19, their specialty pipeline is slowly and gradually going to start panning out. And that is the pipeline that we are betting on, because right now the traditional business, the generic space, I think they are seeing a lot of price erosion, and they've even guided for a single-digit price erosion in the US market. So I think FY18 is not going to be the year where we're going to see a lot of action in pharma space. But come FY19, and maybe the markets will start to factor in this positives of FY19 onwards a little ahead in time. So Lupin at current valuations is looking very compelling. I think the stock always stabilizes somewhere between 900 1000 levels, and I really see less amount of downside from here. So yes, I would suggest to add on to more positions in Lupin, and come FY19 we'll see these companies delivering a good CAGR growth in terms of the top line, improvements in the margin, with the limited competition portfolio panning out.
Okay, so that's the call. You can definitely average. Kirti Mishra has also got BHEL at 96. Sumit, what's your call on this one? 96 is the buying price. He hasn't mentioned any time frame. What would you advise him to do?
Well, L&T and BHEL both are in move. In last 2 or 3 days, we have seen that both the counters have given a very good upside move. Now, as far as the question on BHEL is concerned, in last 3 days, we have seen that the counter has moved up by 10 or 12 rupees from lower levels. Looking at the chart, it seems that the counter has given a breakout. And now, if the closing is seen above 99 or 100 levels in next 1 or 2 days, then there is a possibility that we might see a fresh upside move in the counter, in which we can see levels of around 108 or 110 levels in next couple of days. We have recommended a buy call in BHEL at 95 levels. So I think immediately looking at the charts, they can hold on the existing long positions, and a closing above 99 or 100 levels will take stock prices to 107, 110 levels in next couple of days. Overall, the stock is looking good. One can initiate long positions for a longer term time horizon also. For a longer term time horizon, we are expecting the counter to move up till 120 levels in next 3 to 6 months time horizon. That means a move around 20% from present levels. So one can hold on the existing long positions with a trailing stop loss to be placed at around 92, 93 levels, and if anyone is initiating a fresh long positions, then one can maintain the same stop loss for the upside target of 110 and 120 levels.
All right, Kirti. Sumit suggests you hold on to your position in BHEL, a stock which has been on a tear today, but do put a stop loss at about 92. And Sumit is expecting the target of almost 110 on BHEL. The stock currently trades around the 9900 mark. Let's take another query. This one comes from Mohit. Mohit has bought 1000 shares of Omkar Chemicals at a price of 84. He's got a 2-month view here. Sumit, I'll take this query to you. Omkar Chemicals on the chart, how does it look? He's bought 1000 shares at 84.
The stock is not looking that good. We have seen a correction from higher levels, and in last 2 months we have seen that the stock is moving in a range, and the range is around 74, 75 levels on lower side to 94, 95 levels on higher side. Now it's trading near lower band of the range. If the stock is able to break 74, 75 levels, then there is a possibility that we might see downside in the counter till 60 levels. So the stop loss should be placed at around 74, 75 levels. If the stock is able to hold the support and takes a U-turn from present levels, then immediately we will see a move till 90 or 95 levels, and a fresh upside can be seen once the stock is able to break 95 levels on closing basis. Till that time, 95 is not taken away on higher side and 74, 75 is not taken away on downside. The stock will move in a range of around 15 to 20 rupees. But in any case, he should maintain a stop loss of around 74 or 75 levels, because if these levels are taken away, then we will see a fall of around 10 to 15 points from 74, 75 levels. Immediately from present levels, if there is a pullback till 85 or 90 levels, then it's better to exit long positions from Omkar Chemical.
So Mohit, keep a stop loss at 74 and exit if you see a price around 90. That could be your best case scenario. Well, Khalid Jamal has written to us on Facebook. SBI, the stock he has bought at 340 rupees. Looks like a recent buy on SBI. Parthiv, what's your view? Or, Khalid has not really shared his time frame. But the way PSU bank stocks are moving because of a big development, I think we should get a fundamental outlook for this one.
See, Pradeep, I think if we see, irrespective of the news movements, I think SBI since a very long time has hovered in a range between 240 on the downside and almost 340 on the upside, which is a big range for such a huge company. But unfortunately, I think he is purchased at the upper end of the range. And today also we saw some positive action during opening, and then there was some profit taking. Probably, I think good senses prevailing in terms of the smart money which had entered way before the news are now booking out, thinking that they had a good run, and now they will wait for the recap program to take place and then see the impact of how the return ratios of these banks improve. No doubt it's a quality franchisee, but quality franchisee at the right price. So unfortunately, it's entered at the upper band, but nonetheless, I think I would suggest to hold on to this stock. Now with the clarity of the recap and SBI being one of the strong contenders, it's a no-brainer that this is a company which is at least going to get a share of almost 40 to 45,000 crore of the recap program. And SBI as such, even without that, was capable of raising its own funds. I believe that going ahead in time, the return ratios are going to improve. Still the delta, even at 340 levels in terms of the price to book multiples, there's a huge delta from SBI being such a huge franchisee to even the best run bank like HDFC Bank, which is quoting at 5-6 times price to book multiple. So I think there is some room for SBI to improve. So I think I would suggest a hold for the next 1 or 2 years.
Okay, that's the view coming in on SBI. The stock is seeing some sort of profit booking in today's session. It's trading around those levels of 323. Avinash Chandra Pandey has written to us on Facebook. He's asking if there is any possibility of recovery, of any sort of recovery in Lanco Infra. Pradeep, you want to guess at what price Lanco is trading at?
$5 maybe?
No, let's pull it up. It's, I guess, below 1 rupee, I guess, the last time when I checked, yes. Why would you put your...
for a long time.
Definitely. All right, Avinash, I'll still take your query to Parthiv. Parthiv, Lanco Infra, any recovery do you expect, or would you advise all the retail investors to stay away from penny stocks like these?
Yes, absolutely. I think one has to really understand that whenever any infrastructure company has more liabilities on its books in terms of talking about things like interest servicing, even the interest servicing element has become more in cases like Lanco as compared to the current liquidation value of all its assets. I mean, had it been so easy for Lanco, the management which has been continuously talking about trimming down in terms of the debt by selling of the assets, had it been so easy, they would have done it way ahead in time and not allowed the company to come to this juncture. So goes to show that, you know, always listening to rosy management talks, and especially in such tainted companies which have destroyed huge amount of shareholder value, does not play out. And these are very, very high risk, high return type of bets. Yes, I think recently we have been hearing about people betting on names like GMR, GVK. And I think if you see from the lows, the returns that they're given, they really entice the retail investors. But one has to understand these are not those typical stocks that, you know, which can guarantee a turnaround. So Lanco, I think one of the worst in the pack, and I really doubt it can turn around. I mean, I think totally new investors should totally avoid this counter irrespective of the levels it is quoting at.
Okay. So if you look at, Ankit Upadhyay was asking about GMR and GVK, and Parthiv, you just mentioned this stock, especially on GVK. If you could elaborate on this, if you have had really time to see what would be the impact on companies' financials once they start working on the new airport in Mumbai.
I think coming on GVK, I think there is a good ray of hope in a company like GVK and GMR. The reason being that I think relative to many other such infrastructure company managements, these managements have been slightly more proactive in terms of, I think, working on their balance sheet issues. And I think GVK has good quality assets, namely talking about the airport assets, the road assets and the power assets. The power assets were stuck because they didn't get gas. But now I think the gas supply issue is looking good. And they have, I think, recently won some auctions in the gas auctions. And also going on in time, we are bullish on the power space. So I think if that segment can turn around and if they can successfully sell off some of their road assets, where the traction is being seen right now, and even the government has become proactive in terms of allowing these companies to sell these assets, I think the airport asset is a gem in the crown for GVK. And recently, I think the execution that they've done in the Mumbai airport, everyone's seeing what world-class airport they have developed. So they have the execution capability. They are earning good money from the airport assets, and I think getting the new order is always helpful. But yes, I think that is a company where, though I would say from risk point of view, yes, it is a risky bet. Turnaround stories are always hard to play, but if they turn around well, I think they can be multi-baggers. So I think I would not be shy of saying that GVK is a stock where one can bet on, and I think give it some time, give it 1 or 2 years. Nothing much to lose at current levels of 14-15 bucks, and I think let's see how it pans out. But yes, I think a contra view GVK, yes, I think I would ask the investor to hold on to it.
All right, so if one has invested in GVK, you can look to hold on to your position. Vishal Jain is the next person who has written to us on Facebook. He spot IOC at 426, and I believe it's an intraday trade which he's trying to suggest here. The oil marketing companies have been pretty active today. IOC is also trading with gains of 1.5%. Sumit, what should be the target on this by the end of the day?
See, if anyone, I think if he has initiated trade only purely for intraday, then on intraday basis, there is a possibility that we might see levels of around 430, 435, and it's better to exit at around 430, 435 levels. But if he has a horizon of around 1 week, then the stock is looking very good, because today we have seen that most of the oil marketing company stocks are giving good move, and from present levels, there is a possibility that in next 3-4 days, we can see a move of around 3 to 4% from present levels. So on higher side, as far as IOC is concerned, we are expecting stock to move up till 440, 450 levels in next couple of days. And if he has taken purely for intraday perspective, then there is a possibility that in second half we can see a move till 430, 435 levels, and he can exit positions at those levels.
Okay. Well, let's move on to KEC International. The company is in focus today after they won orders worth 1,931 crore. Vimal Kejriwal, MD and CEO of KEC International, joins us on the phone line with all the details. Mr. Kejriwal, if you could tell us this 1,931 crore rupees worth of orders you have reported, in what period have you really received it?
So these are basically which have come in the last couple of, I'll say 1 or 2 months, because we had released our last order around August or so. So September, sorry. So in the last 30 days or 4 to 6 weeks, yeah.
Has the work started then on these projects? Can we see the impact of it in the coming quarters in terms of your P&L account?
So out of this 1,900, roughly around 800 order from the Brazil market. So that will take some time to start, but the rest of them, we will start seeing the impact immediately.
Immediately, as in?
Some of them even in little bit would come in Q2 also with the orders which we came in September. Okay. But largely it would start in Q3.
Okay. If you could give us details of what kind of orders are these actually, what kind of margins would you expect, and towards the by the end of this year, how much of these orders would be executed, so that we get an idea, how much benefit do you get in current financial? Okay,
so basically, one is that almost 91% of the orders are from our core transmission business, number one. Number two, if you break it geographically, around 30% are from India and the rest are from the overseas market. So that's a broad details of the orders. Revenue and all that, it's very difficult to quantify immediately, but at least maybe around 400, 500 crores of this revenue should come out of these within this financial year.
Mr. Kejriwal, any new orders that you're looking or you've bid for?
See, if you look at our order book today, it's roughly around 14,000 crores, and we have an L1 position of 4,500 crores. So clearly, those 4,500 crores should get converted into orders maybe in the next couple of months.
All right, we'll let you go at that note. Thanks a lot for joining us and giving us an update about that order win. That was the management of KEC. Well, on that note, we'd like to thank both our guests. Thanks, Sumit, as well as Parthiv, for helping our viewers with all the queries. That's all that we have on this edition of Ask PQ.
But do stay tuned and keep watching BloombergQuint live. And remember, we are just a tweet, post or call away. You could keep us posting all your queries through social media. Address all of them through our shows. We'll keep doing that. You can also log on to BloombergQuint.com, search for #AskBQ and get answers to all the queries that were discussed on the show. Power Lunch is up next. Keep it with BloombergQuint Live.